Alright, let's dive into Bitcoin like we're about to unlock the secrets of the financial universe. Bitcoin is a decentralized digital currency, often hailed as the first cryptocurrency. Here's a streamlined explanation of how it works and why it's revolutionary. Bitcoin is a form of digital money created and held electronically. Unlike traditional currencies like the dollar or euro, Bitcoin doesn't exist in physical form. Instead, it exists only on computers in a decentralized network. Decentralization and blockchain. Bitcoin operates on a technology called blockchain. Think of the blockchain as a public ledger or record book that's maintained across a network of computers. This ledger contains a record of all transactions ever made with Bitcoin. The beauty of blockchain is that it's decentralized. There's no central authority like a bank or government controlling it. Instead, it's maintained by a network of independent computers, nodes around the world, mining and validation. Transactions are grouped into blocks and added to the blockchain through a process called mining. Miners use powerful computers to solve complex mathematical puzzles. The first one to solve the puzzle gets to add the block to the blockchain and is rewarded with new bitcoins. This process not only issues new bitcoins, but also ensures the integrity of the transaction history. Bitcoin as a store of value. Bitcoin is often compared to gold because it's a store of value. It's limited in supply. There will only ever be 21 million bitcoins, which creates scarcity. This limited supply, combined with its increasing adoption, drives its value. People invest in Bitcoin hoping it will retain or increase its value over time, much like gold. Security and anonymity. Bitcoin transactions are secured using cryptography. When you make a transaction, it's signed with a private key, which is essentially a secret digital signature. The network verifies this signature, ensuring the transaction is valid. Although Bitcoin transactions are pseudonymous, not directly tied to personal identities, they're visible on the blockchain, which means anyone can trace the flow of Bitcoin from one address to another, but not necessarily to a real-world identity. Use cases and future. Bitcoin can be used for various purposes, as a medium of exchange for goods and services, an investment asset, and a hedge against inflation. Its future potential includes more widespread acceptance and integration into financial systems, which could influence global finance significantly. In summary, Bitcoin is a pioneering digital currency that uses blockchain technology to enable decentralized, secure, and transparent transactions. Its value is derived from its scarcity and the trust in its technological framework. Understanding Bitcoin is understanding the future of finance and technology where control is distributed, transparency is paramount, and innovation is constant. Let's dive into the origins of Bitcoin. The Genesis block Bitcoin was introduced by an anonymous person or group under the pseudonym Satoshi Nakamoto. On January 3, 2009, Nakamoto mined the first block of the Bitcoin blockchain, known as the Genesis block or Block 0. This marked the beginning of Bitcoin and its underlying technology, blockchain. The concept of Bitcoin was first detailed in a white paper titled Bitcoin, a peer-to-peer electronic cash system, published on October 31, 2008. The white paper outlined the vision for a decentralized digital currency that would allow peer-to-peer transactions without relying on a central authority like a bank. The motivation behind Bitcoin was a response to the financial crisis and centralization issues observed in traditional banking systems. Nakamoto sought to create a system where transactions could be verified by network consensus rather than by a central intermediary. The key innovation was the blockchain, a public ledger where all transactions are recorded in a secure, transparent, and immutable manner. At the heart of Bitcoin is the blockchain, a decentralized ledger that records all transactions across a network of computers. Each block in the chain contains a list of transactions and is linked to the previous block through cryptographic hashing. This structure ensures the integrity and chronological order of the transaction history. Bitcoin operates on a consensus mechanism, known as proof-of-work power. In this system, miners use computational power to solve complex cryptographic puzzles, validating and adding new transactions to the blockchain. This process secures the network and ensures that the same Bitcoin isn't spent more than once. Initially, Bitcoin had little value and was mostly used by enthusiasts and cryptography experts. However, over time, its value and adoption grew as it gained attention from the public and investors. The first real-world transaction using Bitcoin was famously used to purchase the pizzas for 10.0 BTC in 2010, highlighting its potential as a medium of exchange. After pioneering Bitcoin and its ecosystem, Nakamoto gradually faded from public view. By 2010-2011, Nakamoto had handed over control of the Bitcoin project to a group of core developers and ceased communication with the community. The true identity of Nakamoto remains unknown, adding an air of mystery to Bitcoin's origin. In summary, Bitcoin originated from a vision of a decentralized, peer-to-peer digital currency outlined by Satoshi Nakamoto in 2008, and it has evolved into a powerful and disruptive force in the financial world. Its underlying technology, blockchain, continues to shape various industries beyond just digital currency. Buy and hold HODL, buy Bitcoin, and hold onto it with the expectation that its value will increase over time. This strategy is based on the belief in Bitcoin's long-term potential, and is often referred to as hodling, a misspelling of hold, that has become a term in the Bitcoin community. How to do it? Purchase Bitcoin on a cryptocurrency exchange like Coinbase or Binance and store it in a secure wallet. This could be a software wallet for convenience or a hardware wallet for enhanced security. Monitor the market and sell when you believe the price has reached a desirable level. Trading. Actively buy and sell Bitcoin to capitalize on short-term price movements. This strategy requires understanding market trends and technical analysis. How to do it? Use a trading platform or exchange to buy Bitcoin at lower prices and sell at higher prices. You can engage in day trading, making trades within the same day, or swing trading, holding 4 days or weeks. Familiarize yourself with chart patterns, trading indicators, and market sentiment to make informed decisions. Mining. Mining involves using computational power to solve complex mathematical problems that validate transactions on the Bitcoin network. Miners are rewarded with new Bitcoins. How to do it? Set up mining hardware like ASIC miners and join a mining pool to increase your chances of earning rewards. Be aware of the costs associated with mining, including hardware, electricity, and cooling. As mining difficulty increases, it can become less profitable. So analyze your costs and potential returns carefully. Staking and yield farming. Although Bitcoin itself doesn't support staking as it uses proof of work, you can still earn passive income through other methods. Yield farming involves providing liquidity to decentralized finance, DeFi platforms to earn interest or rewards. How to do it? For Bitcoin-related activities, you might look into lending platforms that allow you to earn interest on your Bitcoin holdings. Platforms like BlockFi or Celsius offer interest accounts where you deposit Bitcoin and earn interest over time. Accept Bitcoin as payment. If you run a business or provide services, you can accept Bitcoin as payment. This approach allows you to earn Bitcoin directly from transactions. How to do it? Integrate Bitcoin payment gateways like BitPay or CoinGate into your business's payment system. This can provide exposure to Bitcoin's value increase while potentially reaching a broader customer base interested in paying with cryptocurrency. Invest in Bitcoin-related assets. Invest in assets or companies related to Bitcoin, such as Bitcoin ETFs, exchange-traded funds, or stocks of companies that have significant Bitcoin holdings or involvement. How to do it? Look for investment vehicles like Bitcoin ETFs or trust funds, for example. Grayscale Bitcoin Trust that track the price of Bitcoin. Alternatively, consider investing in companies with significant Bitcoin exposure, like MicroStrategy or Tesla. Listen attentively. If you're serious and ready to make money online from crypto, join us and discover how to make money now from the booming world of cryptocurrency. Click the link in our channel bio to gain exclusive access to our premium course and pro membership. Don't miss out and unlock expert strategies, insider tips, and the tools you need to succeed. Your path to financial freedom starts here. Arbitrage. Take advantage of price discrepancies between different exchanges or markets. Bitcoin prices can vary slightly from one platform to another. How to do it? Buy Bitcoin at a lower price on one exchange and sell it at a higher price on another. This requires quick execution and an understanding of the fees involved, as well as the ability to transfer funds between exchanges efficiently. Educational content and consulting. Share your knowledge about Bitcoin and cryptocurrency through educational content or consulting services. This can be monetized through courses, books, or speaking engagements. How to do it? Create and sell courses, write blogs or books, or offer consulting services to individuals or businesses looking to understand and invest in Bitcoin. Participate in Bitcoin-related airdrops and promotions. Occasionally, new projects or companies in the crypto space distribute free tokens to holders of Bitcoin or other cryptocurrencies as a promotional strategy. How to do it? Stay informed about airdrops and promotions within the crypto community. Follow reputable news sources and forums to learn about opportunities and ensure that you're participating in legitimate promotions. In summary, there are multiple ways to make money with Bitcoin, from long-term holding to active trading and participating in related economic activities. Each approach requires different levels of involvement, risk tolerance, and expertise, so choose the strategy that aligns with your goals and capabilities. Always conduct thorough research and consider seeking advice from financial experts before making significant investments.